Welcome to the Capital News. I'm your host, Alex Karitis. Today is Monday, September 14th, 2020. Thank you so much for joining me. The title of today's podcast, Economic Survey Says. We try to do our best here to provide the audience with the fullest picture of what's going on economically and politically, but with more emphasis on financial markets and the economic side of things. But of course, it's very difficult to break away from a lot of the political shenanigans that are taking place too, and they are important. And, I'm an American. This is my country. I have an opinion, and I'm going to voice it, and I'm going to share it with this audience. That's what this podcast is all about. So as I stated during yesterday's podcast, I do want to take the time to go through a survey that was written up, a nice article written by NPR. It's a lengthy article, so we'll see if we get through everything because there's a couple other topics that I want to discuss today as well, a follow-up to yesterday. And, of course, some market performance because there was a massive rally on the major averages across the board today in the stock market. So let's begin first with some of the market performance. Let's start first here with some of the currency markets. We have the dollar index now trading once again with a 92 handle. We have 92.881 for the dollar index. So this is rolling over once again. We had that mini rally last week. This could simply be a pause in the action, a little bit of a pullback and consolidation, and then a continuation of upward momentum, or this could be a pivot point where it rolls over once again. Now, your guess on this is as good as mine, but we do have Jay Powell, the chairman of the Federal Reserve, will be giving us his remarks this Wednesday following the FOMC meeting, where they're going to make their decision on interest rates and how to proceed, what their messaging is going to be, how they're going to jawbone the markets, whatever they're going to do. So this could be now the markets trading this week, placing their bets that the Federal Reserve is going to come out more dovish, which is reasonable. That's what they're going to do. So there's going to be some softness in the U.S. dollar. So it's no surprise that we see a little bit of weakness, at least today, in the dollar index, again, trading right now at 92.884. Anything's going to happen. They are just getting started, they being the Federal Reserve. A balance sheet at over $7 trillion. It expanded by a few $1 trillion over the course of a couple of months during the spring and summer. This is just a pause in the action. I imagine Chairman Powell is going to be begging, if you will, continuing to beg Congress to do more, because that's how the Federal Reserve throws more money into the system. Government's got to borrow it. Well, there's got to be somebody to buy it. Well, the Federal Reserve's ready, willing, and able to buy up Uncle Sam's junk. So we can continue the charade. So we can continue operating this Ponzi scheme. So we can continue operating this banana republic in which we live in. That's all they want to do. It's the perpetual kicking the can down the road as much as possible. All of this is going to come home to roost. We've seen tidbits of this. We saw it in the fourth quarter of 2018. We saw it a couple pullbacks during 2019, but not too many. And we saw it at the first quarter of this year with the massive decline in March. The higher you go, the further you fall. And it's being done with such rapidity, people's heads are going to spin. People can lose 10, 20% like that, drop of a hat. What do? I lost 20%. I'm trying to retire. 20%. I got to make 25% just to get back to even. Is the Federal Reserve's funny money, is it going to do the trick this time? Are the BS headlines of a trade deal or a vaccine, is that going to do the trick to get this thing back up? Or is the market going to say, game's up, music's over, grab a chair? And there's not going to be many chairs to grab, unfortunately. So we'll pay close attention, as we normally do, with the chairman's remarks this Wednesday. Couple percentage point gain pretty much across the board. Right now, overnight futures trading, we have the Dow Jones Industrial Average and the S&P 500 both up about 0.3%. The NASDAQ 100 is currently trading up about 0.4%. Cash trade in Japan is down about 0.5%. of 1%. Across the pond in Europe, a mixed bag. Somewhat in the red mainly, but relatively flat, nothing to write home about. Australian cash trade is also down about 0.1%. On the share front, we have Apple gaining 3 percentage points for the day. Tesla gaining back 47 points, an increase of about 12.5% for the day. That is Tesla trading at about $420 a share. Microsoft gained $1.38. Amazon lost 13 points. Alphabet, the parent company of Google, lost 10, and Facebook relatively flat, losing 46 cents. On the commodity front, we have WTI trading at $37.25 a barrel. Brent is at $39.58. Natural gas at $2.29. This is also something to pay attention to. What's going to outweigh what factor here with regards to the oil market? Is it the demand picture, which really isn't picking up, at least not in my estimation? Or will dollar weakness, if that comes to fruition, will that play a bigger role in moving the price of oil up, which is, of course, not something that people who are strapped for cash want to see? So this is a very interesting dynamic that's being played out in these markets. And, of course, with all of the geopolitical tensions that exist, that's another unknown factor with how that could play out with the oil market as well. Gold and silver both had a good day today. Spot gold is at $1,965 an ounce. Silver spot is at $27.42 an ounce. Gold and silver mining stocks were off to the races today. It's still early in this long-term bull market run for gold and silver, in my opinion. Do your research, ask your broker, get educated on it, because the printing presses around the world are not going to be turned off. Federal governments are not going to stop spending money that they do not have. So the fundamentals are there for the precious metals. I also think on a technical standpoint, they're still flashing bullish in the short and midterm as well. But anything can happen. We don't know what somebody's going to tweet. We don't know what Jay Powell might say that goes against the grain. That's why I said yesterday, expect a choppy week, because that's typically the case when you have the Federal Reserve come out and making comments, because there are so many bets one way or the other. There's a lot of unwinding, things that they didn't think were going to be as dovish, or whatever the excuse they want to say. It causes some short-term volatility. But long-term bull market run for gold and silver, and with the accompanying gold and silver mining stocks. Rounding it out, Uncle Sam's 10-year junk note is yielding 0.67%. So that's some of the market performance. A lot of this rally, it could be a continuation of a short squeeze for some profit taking, and it could also be because of the BS headlines with more COVID vaccine stuff. And again, we talked about this yesterday. Well, that was a continuation, obviously. Pfizer saying, well, we're going to know here, the end of the month, end of October, whether this thing is safe or not. The October surprise. We'll see what happens. And AstraZeneca, well, it's still on hold, at least for now. They're monitoring, though. I'm sure AstraZeneca will come out and tell us as soon as they possibly can, once everybody has gone long their stock, that it's back online, and they're going to continue with the testing. So we'll keep you updated on that as well. Yesterday I had mentioned Bob Woodward's book, as I did last week, because this is making some news, and this is more interesting because the president is the source. The president was interviewed 12.5 times by Bob Woodward. Sometimes the president even called Bob Woodward. So this is not an anonymous source. This is not somebody with an axe to grind against the president that they can continue to point the finger at and say, this is an unnamed source, blah, 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 blah. No, this is the president this time. What I find interesting and how this relates, I think, how this is going to unfold in the debate, because the first debate is in a couple weeks, September 29th. And again, I'm reserving my analysis to share with this audience on the Electoral College and some scenarios until that debate is concluded, the first one. But we will have that discussion in the not-too-distant future. But Chris Wallace, anchor with Fox News, is scheduled to host the first debate. And like I said, last time he hosted, I believe it was the third debate between Trump and Clinton, and he did the best job, in my opinion, of all of the moderators. Now, this week, he had, of course, some campaign members from the Trump campaign on his Sunday program, and Mr. Wallace was asking questions about Bob Woodward's book, that the president is downplaying. He knew he was downplaying. He wants to continue to downplay the virus because he doesn't want to cause panic, is his reasoning behind that. You even got a different defense from this campaign personnel. Now, here's the interesting thing when it comes to the debate. Chris Wallace almost 100% is going to ask the president about this book and about those taped conversations with Bob Woodward. Now, the question becomes, how is Chris Wallace going to play it? Is Chris Wallace just going to ask the question, allow the president to answer it, and then simply say, okay, rebuttal to you, Mr. Biden? Because I don't think that's going to be the case with respect to some of this question, because I imagine that the president is going to lie or exaggerate or misdirect or push the blame on to Biden. He's going to try to distract, deflect, or lie. He will do maybe all three. Will Chris Wallace allow him to do that and allow Joe Biden to be the counter? Or is Chris Wallace going to say, no, sir, that is not what was said. This is what was said. Quote, what say you? Because Trump has set a very low bar for Joe Biden. He wants to make this visual, he wants to make this character of Joe Biden being this stuttering, rambling, old fool who doesn't know anything, who can't make himself out of a bag. Okay? And a lot of people believe that to be the case. Look, he can't string a sentence together. I don't like him. But this is the president's strategy. He has set the bar so low for Joe Biden. This can backfire because Joe just has to show up. He's just got to put on a good performance for really the first 30 minutes if he can hold his own. As long as he doesn't crap the bed, that whole caricature that Trump and his campaign is trying to push onto Biden, well, they say, well, it's not true. He's up there against Trump and he's holding his own. Now, of course, if Biden does crap the bed, that's a completely different story. But if Biden can hold his own, and if Chris Wallace presses the president and says, no, sir, that is not what you said, that is not the context, yada, 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 that could ruffle Trump's feathers. Maybe Trump's the one that breaks down. Because he's setting the bar low for Biden, that means the bar is higher for Trump. I don't think that was a smart play, but it's his campaign, it's his presidency. If that's what he wants to do, that's his decision. It's his decision. Because you have early voting, and a lot of people are just going to wait for this. They're going to say, okay, I don't like Trump, but I am concerned about Biden's age and how he handles himself. If Biden can hold his own, people are going to say, that's all I needed to see. I'm going to early vote. I'm going to vote for Biden, and that's it. In those ballots go, game over. Even if Biden should crap the bed in debate number 2 and 3, those votes are already sent off. That's how important this first debate can truly be. So that's just something to be mindful of. And then, of course, we got some more tapes out. And Trump, in August, calling up Mr. Woodward because he heard that the book was going to be published, it was written, it was going to print. And he wanted to understand the context of the book, if it was going to be favorable to him, tough on him, whatever. And Bob Woodward explained that it's going to be a tough book, sir, that people are going to come at it, it might be controversial, this, that, or the other. And Trump, in private and in public, it continues to express his fascination and interest with the stock market and continuing, I guess, to believe that the stock market is the economy. It is not. We know this because of the massive valuation levels that we witness that are record-breaking, and that is not a good thing. That is not a good thing. And when you have those types of overvaluations, that means it's hugely disconnected to the underlying economy. Now, either Trump doesn't understand this or he doesn't care. Either is unacceptable. Neither is it unacceptable that a lot of these gains are because of a banana republic printing press. Completely unsustainable, completely un-American, not free market capitalistic in any sense of the word. But he continues to hype the stock market. Well, that's coming back. We're going to make all-time highs. 10% of this country own 90% of the financial assets. That is not a boon for the rest of the country. And the majority of his own base do not fall in that category of the 10%. They fall in the category of the 90%. They don't have stocks. They don't have these financial assets. And that's what this economic survey starts to focus on. It's just, I just don't know if he fully understands what's going on. Thousands of people are dead. You can have an argument about the numbers. They're inflated, whatever. But people are dead. He downplayed it. He knew he downplayed it. Claims there was nothing else to do. The stock market's coming back, so all's well in the world. I have a problem with that. I really do. But I am not surprised by it either. So that's enough for now. We will focus on that, and we'll see if that prediction comes true at the end of the month. Again, that's not rocket science, but it's something to pay attention to because that could have a big role in how this election shapes up. So here we have the NPR poll, financial pain from coronavirus pandemic, much, much worse than expected. In America's 4 largest cities, at least half of people say they have experienced the loss of a job or a reduction in wages or work hours in their household since the start of the coronavirus outbreak. That's the finding of a new poll published Wednesday by NPR, the Robert Wood Johnson Foundation, and the Harvard T.H. Chan School of Public Health. This article was written on September 9th. Many of these problems are concentrated among Black and Latino households in the 4 cities, according to the poll, which gathered responses from July 1st through August 3rd, and I do believe they will be updating this and continuing the survey as the months proceed. Houston had an especially high proportion of Latino households, 77%, and Black households at 81%, reporting serious financial problems. But the other 3 cities in our survey have had high rates as well. 73% of Latinos in New York City tell us their household experienced serious financial problems since the start of the coronavirus outbreak, along with 71% of Latinos in Los Angeles and 63% in Chicago. Majorities of Black households in Chicago at 69%, New York City at 62%, and Los Angeles 52% also report serious financial problems. This is for the city of Houston. Majority of households report facing serious financial problems. In Houston, 63% of households reported having serious financial problems during the pandemic, compared with 46% of households nationally. Broken down by race and ethnicity, whites are at 34%, blacks at 81%, Latinos at 77%, and of course they also do a breakdown by income, with those earning less than $30,000 experiencing an 86% financial strain response, serious financial strain, which makes intuitive sense. The less income you have, the more likely it is you are not going to have any type of safety net. Nationally, the NPR poll finds very substantial proportions of households reporting that their savings have been depleted by the pandemic, if they had any savings to start with, and ain't that the truth? Or that they have fallen behind on housing payments, or have had problems paying debts and or utility bills. That paragraph right there is just heartbreaking, and these issues were occurring before the pandemic. Low savings to no savings, paycheck to paycheck. Before federal coronavirus support programs even expired, we find millions of people with very serious problems with their finances, says Robert J. Blendon, a poll co-director and executive director of the Harvard Opinion Research Program at the Harvard Chan School. And it's going to get worse because there is nothing for the people we surveyed who earn under $100,000 a year to fall back on. And we also know, unfortunately, through other various surveys that we've discussed here, that even people making six figures, there's a sizable portion of that population that lives paycheck to paycheck or does not have any type of significant safety net. Blendon says the Harvard team expected to find substantial economic damage because of the unprecedented shutdown of the economy. Quote, but this is much, much, much worse than I would have predicted, end quote. This is what I would expect without a national emergency relief bill, Blendon says. We had a $2 trillion relief bill to lift people up and put a pillow under them, but it is not helping nearly as many people as we had expected. Well, maybe, Mr. Blendon, you should be listening to the Capitol News so you know where the money's actually going. It's going to corporate bailouts. It's going to those in the know, who you rub elbows with. That's where the money is going. It's not a coincidence where you have the billionaires in this country and major corporations with astronomical increases to their net worths and corporate valuations. Do the math. Follow the money. It's not that difficult. This is why you don't do these, ladies and gentlemen, these bailouts. You do not do them. Debate over an additional federal financial aid package resumed this week as Congress returned from its weeks-long summer recess. Much of the economic relief provided by the federal government expired this summer. They go on to continue what we already know with the non-passage of the Senate bill. Serious child care problems found. Beyond serious financial problems, majorities of households with children in the 4 cities report serious problems with caregiving. Such difficulties include finding physical activity spaces with enough distance from others or keeping children's education going. This is out of New York City. 3 in 5 households with children report serious caregiving problems. In New York City, 60% of households with children reported having serious caregiving problems during the pandemic, compared with 59% nationally. They break this down in a graph. We have serious problems caring for children at 60%, serious problems finding play and physical activity space at 41%, serious problems keeping children's education going at 33%, and then there is a few others as well to round it out. And again, this is for the city of New York. And it's not just that these households are struggling to keep their kids' education going. They are also struggling with almost every other aspect of managing their children's lives, says Mary Gorski-Findling of the Harvard Chan polling team. In Los Angeles, the primary serious difficulty cited by households with children is keeping children's education going at 52%. Drilling deeper, we find that 54% of LA households with children report either having serious problems with their internet connection to do schoolwork or their jobs, or not having a high-speed internet connection at home. That is also another heartbreaking paragraph. We are supposed to be the best country in the world. Isn't that what we're told? USA, USA. Aren't we supposed to be exceptional? This is one of the largest cities in the country, Los Angeles. 54% of LA households with children report either having serious problems with their internet connection to do schoolwork or their jobs, or not having a high-speed internet connection at home. Oh, but guess what? The Federal Reserve, through their alphabet soup of emergency facilities, finds the time and finds the money to buy the corporate debt of AT&T and Verizon and others. Where's all this money going? You know, I don't have the data in front of me, but the internet speed in the United States, I don't even think it's in the top 10 of industrialized countries, the internet speed. I mean, Singapore, South Korea, they are basically just light years ahead of us. And we are supposed to be the greatest country on the face of the earth. I don't know. It doesn't sound like it to me. It's one statistic after the next. Unbelievable. Serious health care problems. Our survey also looks at the ability to get health care during the pandemic, after many reports of Americans putting off or being unable to get care. We find high rates of households in the 4 cities have been unable to get medical care or have delayed needed health care, ranging from 19% in New York City to 27% in Houston, with over half saying that this has led to negative health consequences ranging from 55% in Chicago to 75% in Houston. There were multiple reasons given, with many reporting that they could not find a doctor to see them, as hospitals around the U.S. have delayed or canceled medical procedures to focus resources on treating COVID-19. In New York City, where hospitals and intensive care units were massively overcrowded for weeks this spring, 19% of people say at least one member of their household has been unable to get medical care for a serious problem when they needed it during the pandemic. In more than half, 59% of those households say they suffered negative health consequences because of the lack of care. And among the 9% of households in the city who say that they were unable to get timely surgeries or procedures done for important health problems during the pandemic, 56% report negative consequences. So this is another problem in and of itself, ladies and gentlemen, that is still unfolding in real time, and this is going to be another very costly and expensive problem. Additionally, those who report having someone in the household working in the healthcare field express serious concerns about their safety on the job. In all 4 cities, majorities of households with healthcare workers express serious concerns about their safety in regards to the coronavirus at work, including more than 3/4 of those in Los Angeles at 78%. Serious financial issues, a core problem. Nationally, in our survey, beyond the 4 largest cities, 46% of people report serious problems with finances in their household during the pandemic. The poll was also able to capture snapshots from those 4 biggest cities at different stages of the months-long coronavirus pandemic. Cities that have had a range of public health responses to the virus. For example, in Houston, where the epidemic peaked in July, about 4 in 10 households, 41%, report using up most or all of their savings. Another 19% say they didn't have any savings to begin with. That means about 60% of Houstonians were either flat out broke by early August or nearly so. Another heartbreaking paragraph. This is Houston. At any point since the start of the coronavirus outbreak, has anyone living in your household had, and then it's an open question or not, serious financial problems, 63%. Used up all or most of savings, 41%. Serious problems paying credit cards, loans, debt, 41%. Serious problems paying utilities, 37%. Serious problems paying mortgage rent, 34%. Serious problems affording food, 33%, and then there's a couple other questions as well, and they do this as a breakdown of those Houstonians with low-wage households within low-wage households, and of course those numbers are even worse for those households. We also found a bigger impact on employment than other surveys have indicated. Some 57% of Houston households report that someone in their household lost a job, lost a business, has been furloughed, or has had wages or hours reduced since the start of the coronavirus outbreak. These households report serious financial problems in even greater numbers. So that's interesting to note, because that's trying to sort of move the curtain back a little bit further beyond what we're trying to see as well, looking deeper into those weekly initial jobless claims numbers, the total number in aggregate of those collecting some form of unemployment insurance benefit, and of course the official jobs report. So that is a very interesting statistic right there. Los Angeles, majority of households report facing serious financial problems. In Los Angeles, 56% of households reported having serious financial problems during the pandemic, compared with 46% of households nationally. And those statistics, same across race and ethnicity, and also by income, mirror the other large cities. A similar picture emerges in Los Angeles, where a surge in coronavirus cases was also peaking in July. There, more than half of black households report serious financial problems at 52%, compared with 37% of whites. And in LA, 71% of Latinos, almost twice the percentage of whites, report serious financial problems. In Los Angeles, more than 1 in 3 households report serious problems with paying credit cards, loans, or other debt at 35%, while the same percentage report having depleted all or most of their savings. 1 in 10, about 11%, say they didn't have any savings at the start of the outbreak. Another heartbreaking paragraph and statistic. Half of New York City households, 50%, say they suffered job or wage loss. And among these households, 73% say that they are having serious financial problems. Nearly half, 47% of those with employment changes, say they've used up all or most of their savings, with 8% more saying they didn't have any savings at the start of the outbreak. Another heartbreaking paragraph. I'm going to wrap it up there. This is just simply a continuation, a breakdown by these largest cities, which is relatively indicative of what we're witnessing across the country. Look, folks, we spent trillions of dollars, and this is all we got for it. We know where the money went. We know what it's going to cost. We know how devastating this is and it's going to be. Once these moratoriums are lifted, and they already have, some of these moratoriums, they're going to be lifted. Once these jobs programs, these benefits, these unemployment benefits, once they start to dry up, and some of them already have, and we still have millions of Americans who have yet to receive anything. Or they have received some, and then they're not receiving more, of which they are entitled to. The biggest problems are coming next year because we pumped trillions of dollars into the system. And I don't know if Congress thinks that the stock market's up, that means the economy's coming back, so they're not going to do more. Or if the president thinks that the stock market's up, so the economy's coming back, so we don't need to do more. Or if the Republicans are simply trying to pretend like they're growing a spine and they all of a sudden care about debts and deficits, even though the Treasury Secretary comes out and says this is not the time to be concerned about debts and deficits. He wasn't concerned about them before. Is this the Democrats playing politics, saying, well, we wanted to give the people trillions and the Republicans don't want to do it? It's a whole host of issues. And again, I'm against all the bailouts. But if you're going to buy the corporate debt of Apple and AT&T and BMW and Toyota, well, hey, maybe you should give it to the people too. They don't have it. They're broke. They were broke before the virus. But as I've stated here before, the real virus is the system. The real virus is the two-party political system that feeds off of the American people. It tells the people what they want to hear. They get the votes, and then the people get screwed. Rinse, repeat, rinse, repeat, rinse, repeat. When are you going to wake up? You got taxation, you got regulation, and you got a printing press. You got inflation. This is a recipe for disaster. We are experiencing, everything that we are witnessing is the cost of what we are doing to ourselves. This is the cost. And it is going to get much, much more expensive. The protests will pick up. The riots will pick up. People without any type of financial safety net is going to increase. Job security is going to get less certain. We already know there are massive layoffs waiting in the wings. We heard from the airlines. One of the conditions within the bailout money that they received, you cannot involuntarily lay off your employees. Voluntarily, you can offer them a buyout. But you can't just say, well, we're going to lay people off. Nope. Well, that expires at the end of the month. And air travel is nowhere near where it needs to be to sustain that level of employment. So there's going to be massive layoffs. And a lot of those jobs are good paying jobs. And what about the benefits? See how this is going to spiral? There was a lot of companies that stated, well, we're not going to lay anybody off during the pandemic. We're going to do what we can to keep people employed. We're going to try to do the right thing. Now they're starting to lay them off. Citigroup, one of the largest banks, I'm sure you've seen some of the headlines, now has a female CEO. That's all fine and dandy. Congratulations. But now they are starting to lay people off already. Think about close to 1% of their global workforce. It'll be about 2,000 jobs. Now, globally, you can say that's not terrible, but this is just sort of the start of the unwinding. And we know the first wave of jobs was mainly concentrated in lower-paying professions. It's going to start picking up. It's already starting to pick up with those white-collar jobs. We're seeing the trend in the Department of Labor initial claims report. Over the past couple of weeks, an additional 3 million people virtually are claiming some form of unemployment insurance benefit. That is the wrong direction, and that ties in with what we've been seeing with other surveys and other studies, that the PPP loans and other Nobody Cares Act projects and funds are starting to dry up. And as we've been stating here for months, do you think it's just going to be a miracle that once those funds dry up and they're exhausted, that the demand is just going to miraculously reappear? Pronto, presto, just like that? No, and it appears that that's not the case. That demand is not coming right back just because those loans and those grants are now exhausted. And that's why you see nearly 3 million more people collecting unemployment benefits. In the jobs report, I've been stating here for months, look under the hood. Look at how permanent job losers is trending. It's trending up. An additional 500,000 last month. Permanent job losers, taking the number to about 3.5 million, a figure we have not seen since 2013. Wrong direction, not a V-shaped recovery. This survey by NPR and the other foundations in Harvard, not in the right direction, worse than they were anticipating. Well, we gave trillions of dollars out there to the Nobody Cares Act and what the Fed's doing and we thought it would be a little bit better than this. Not good. But there's no leadership. There's no honesty. There's no truth-telling. And that is what's needed more than ever. And because nobody's getting it anywhere around the world, you got these protests and these riots taking place. People are crying out. Literally, they are out in the streets crying, screaming for truth in leadership, and they're not getting it. They're getting corruption. They're getting political shenanigans. And they're getting Banana Republic printing presses. So it's no surprise. Economic survey says, stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.